Hi, Holly. Hi. How are you? Okay, great. So what I wanted to do quickly was to, sorry, this is just coming, um, was to quickly go through. I noticed you mentioned something about just substantive procedures, and I just wanted to really quickly give you a background. This is the first vid, so I'll mark all your questions, and I'm sure in the process we'll be answering more of these questions. So just quickly go through what you should be thinking about when you're doing your substantive testing. Now, let's go. The key issue here is substantive testing actually is quite nice because what we're really saying is with accounting we're very clear on what we're testing. So we're testing stuff in the income statement, statement of financial position, and the disclosures. Those are the three areas that we're testing. So we're testing balances, and when I say balances, whatever is in these statements, really. Um, so So here we're really looking at we're testing we're trying to see whether or not those because someone's come along and said to us these figures here, these are my figures, A, E, L, whatever, I, E, this is equity, of course, and these are expenses, and this is income. So whatever you want to, however you want to discuss them. um, so that's how we're trying to just make sure that these figures that have been put here are true and fair. So really, the way we say it is that the directors have made assertions that these figures in here are true and fair. We're really testing or pushing those assertions. So once you get that in your mind, it's easy with the way you test. You could actually make up your own test because we know that generally most people try to inflate their income and deflate their expenses. So in other words, overstate their income and understate their expenses. And we know the same thing will apply here because we know that this is about valuation. So the bigger A is, if you like, the greater, if you like, the value of the business, right? Because ultimately A is equal to C plus L. So ultimately, if I can minimize L and I can, if you like, maximize A, I'll ultimately have a greater equity in the organization. And disclosure really is about exposure. What am I willing to expose? So that's what we're really doing, right? Okay, great. So let's quickly look again what the assertions. So they're key assertions again that we talked about. And the key assertions, there's an acronym, ACCA cover. Now, when I say ACCA cover, here they are. So you have occurrence. Again, you can read these. I'm sure I know you know where they are. But the idea is that this transaction actually occurred. And now, here's the thing. We know that typically you'll come here because when we talk about revenue, and cost of sales and these are events that occur, right? These are things that happen. They're flows. They're flows. So flows occurred. They happened. So that's kind of the first. I mean, there's a range of them, but really occurrence. So really the question is, our substantive test is looking for whether or not they occurred. So if something occurred, I actually want to see, if you like, the evidence that it actually happened. So I want to see an invoice, if you like, and not just see an invoice. I want to try and see the full audit trail, so from the very idea of the order all the way through to payment. So it's you just creating, so you could call this a walkthrough if you like. You're literally going through everything. So completeness. Now, this question about completeness again here is this idea that, as you can imagine, completeness means is everything in there. Now, it is actually it's very likely that everything will be there for your assets, right? Because why not? If you have all these assets, why leave any out? It's more likely that for your liabilities there's a stronger rationale or a bigger chance that you'd want to leave things out. Same with your expenses, bigger chance you want to leave things out. So you can see that the things that are likely to be understated are the things you might want to leave out and say you don't know, if you like. So we have our massive, beautiful cutoff test, if you like, that ensures that everything, so that's the procedure. A cutoff test is your procedure, your way of checking that everything has been completed. And so we're literally going through all of them. Accuracy, well, cutoff, of course, is an assertion. Classification and understandability, have these been put in the right place? So these are the assertions that we're really, do you actually own these things? right? You actually own these things. And so you can have a building, we want to see the title deed. That's where we're going with this idea. So what we must first of all recognize is that we have these assertions about those things. And here they are, ACCA cover, um, this cutoff really is more the idea that it must be in the right period. Yes, and we discussed this. So that's what's going on. So really, the substantive procedures are just what are we actually doing to check to see that these things aren't overstated or understated, right? Now, so I'll head over from here, discard, and I'll go straight to the the text. So when it comes to talk about procedures, really, I wouldn't. It's not even about cramming them. It's just like saying, let's pick something. So the first thing they've picked in this in the chapter 10, by the way, is bank and cash. So I don't think it's about reading this blindly. It's about just doing the questions, and then by doing that, you will know straight away that okay, you want to know this is an asset. Does it exist? And I guess there's valuation. So first of all, the best thing for a bank is to a bank test, if you like, is to actually look at the bank statement. Because you see, here's the thing: as you're aware, in the statement of financial position, the figure there is really your cash book balance, isn't it? It's not the actual, well, probably nowadays it's all very much what's in the bank statement. But the bank statement is what helps us to confirm what's in the statement of financial position, which is bank. So bank in the financial statement of financial position is really the cash book. So we really want to see the reconciliation. You can see, so we have a bank confirmation letter and a bank reconciliation confirming those. And those are the sort of, if you like, the tests we're doing to see confirm there. And again, this is existence and valuation. This is the assertion. These are the assertions for bank. So let's go down a little and see another balance. We're literally just picking non-current liabilities. So again, like I said to you, these are loans. The likelihood the likelihood is that someone wants to kind of not put all of them in. And then there's a question of classification, if you like, and allocation. So you can see here, allocation talks about the need to split the current and the non-current. And there's a question of disclosure, because I want to say what they are. So this is all chapter 10, and you want to kind of spend some time reading this. So let me go back and answer and feedback on your questions.